Liz, what Mike was just talking about, that kind of boring S&P 500 move, maybe it's not sell in May and go away. Maybe it's hold on in May and see what's there to play.
Yeah, that was a good rhyme, Becky.
I don't know, I made that up.
I think as we move, I think as we move through summer, we're probably going to be bored with the market action, and that's okay. Boring is fine with me. And if we look even just at last week and the meme mania that went on, the VIX still stayed well below 20. So the market isn't taking some of that as an indication that we've got not taking it as an on a broad basis. And I think as we get more and more economic data, we'll get CPI data tomorrow. We're obviously going to hear from the Fed next week. We may see some gyrations just like we saw last month. If inflation data comes in hot and tech stocks get scared, maybe yields get scared. But I do think things will start to settle back into this pattern, and we just kind of grind sideways for most of summer.
Why do you like small caps?
I like small caps because the cause of a crisis and the way that we went into a crisis matters, and it matters for how we come out of a crisis. So small caps got hit the most on the way in. Small businesses got hit the most on the way in. Coming out, they should be able to rebound much more largely than some of the larger cap stocks. What concerns me, however, and this is a difference between this year and this cycle, what concerns me is some of that small business optimism index data that came out this week. So looking at 48% of small businesses that have unfilled job openings. Of that 48%, 93% of them can't find qualified workers. Yet still 27% of small businesses are planning to create more jobs in the next 3 months. So that gap is going to widen. Why that's a problem is because if we start to depend on small businesses to drive GDP growth and they can't find the workers to make their businesses run and reopen fully, the GDP growth piece is going to see a headwind going into 2022.
Yeah, I saw that too. And I just wonder if it's tougher for small businesses to be able to thrive or even survive if they're having the same problems that big businesses are. Big businesses may have trouble finding people to fill the jobs, but because it's a big company, maybe they can kind of camouflage that and work around the edges. If you're a small company and you can't find workers, you're much more likely going to have problems, meeting demand, fitting the output that you're supposed to be putting out.
That's exactly right. And we're going to paint with a broad brush here. Large businesses not only have some more flexibility in where they can cut costs and they probably have different revenue streams, they also usually have a lot of different parts of the business that can do well at different parts of the economic cycle. Small businesses tend to be more concentrated. They do one or two things and they do those one or two things very well. So if those parts of the business are suffering, they don't really have a lot else to lean back on. So it is possible that small businesses aren't quite as resilient if we continue to have this labor problem. It's important to watch this data as we get through the end of 2021. I'm going to keep a really close eye on that because making that transition and having small businesses find that labor to keep their doors open, meet demand, and have top-line revenue growth is going to be really, really important for our economy. Small businesses employ 50% of our labor force, so it's not something that we should ignore.
Shepard Smith here. Thanks for watching CNBC on YouTube.